overall, there's not a lot to pick at in terms of the quarter guy. But when Tim Cook is smiling, talking about the results, I know that it irks you.
Of course
so
he's smiling.
To you and
I'm smiling ear to ear, baby, smiling ear to ear.
If you wanted to say, hey, but wait.
I'll give you a few hey, but waits. Now, people will say the numbers are astronomical. We'd never dismiss the numbers. They are $102 billion, record quarter in revenue. Absolutely. If you look at their services now, 27% of overall revenue, tremendous growth there. 76% margins in services. They deserve it of a higher valuation. But then you say to yourself, well, wait a second. They're still growing high single digits, maybe low double digits revenue, mid-high single digits, low double digits earnings growth. And you're paying at this price almost 34 times next year's numbers. So the numbers are great. It's the valuation that should still be concerning, despite all those accolades I just gave out.
Not concerning to people in general. I mean, the stock's up 30% going into earnings over the past 3 months. 52-week high in today's session.
Yeah, if you don't care about valuation, and I think in a market like this, really people don't. I think with a company like Apple, you want to see this move back towards double-digit hardware sales, or iPhone in particular. They haven't had that in a very long time. And to Guy's point about accelerating services, getting back to that 20%, I think one of the biggest differentiations of this story versus the other in the Mag 7 is we've been going back, forget Tesla, but the hyperscalers and the like, we've been going back and forth is this CapEx over the last, couple years, is it good? Is it bad? Is it misallocation of resources here or there? You're throwing caution in the wind. Apple, as a percent of their revenues, their CapEx has been tiny, and it's been tiny relative to that of their, big mega cap peers. Now, you could say that's bad because they're not building the infrastructure they're going to need going forward. You could also say it's all going to be commoditized and they're going to be able to build businesses on the back of it, and I think that's probably what's coming out right here. I don't think that this cycle on the hardware, while it is good, I don't think it has much to do with AI in general. Let's see what this Siri rollout. Let's see what some of the services that are built in and around it. Let's see who they partner with. I think this is going to be really important. But I do ultimately believe that if they're going to partner with Gemini and they have that deal with Google Search on Safari, I think that's probably the best bet for them going forward. And then let app developers figure out what the experience is going to be on an iPhone.
Does the valuation of Apple concern you, Courtney? And relative to, what we got from Meta yesterday, where CapEx is going to, increase notably next year with no fixed number given, at a lower valuation than Apple with a higher valuation. I mean, which one would you prefer?
Yeah, I think that is the problem with Apple. It is the valuation and the no AI story. So I do think it's good that you are going to continue to see these iPhone sales that are picking up. We were hoping that was going to happen with the iPhone 16. It didn't happen. It's hopefully happening with the iPhone 17. I do think it's concerning seeing how there aren't any China, or the China sales were actually quite a bit of a miss there. But hopefully that's going to look better moving forward. But as good as the numbers look, I just don't think it justifies that kind of evaluation. I do think compared to Meta, which just reported, people are anxious about the amount of CapEx spending and at what point they're going to monetize that. And I think that's been a positive for Apple because they don't have it. So I don't think it's a benefit for Apple. It's just like if you're going to compare the two and you're worried about CapEx, well, maybe you look back at Apple again. And that's what happened back in April. If you remember when people were concerned about it, Apple was doing fine. You're kind of starting to see that trend pick up again.
I mentioned the run into the earnings, Carter, of Apple. You could have easily seen a reason to sell in the news kind of event. What does the chart look like?
Well, what do we know? That Apple has been a major laggard, right? Its relative performance to its sector peaked in 2022, and it has been playing catch-up ever since. The stock is only just now breaking out above its pre-tariff sell-off high. So that high was 260. It lost some 34% in the tariff sell-off, much more than the S&P. It has now recouped that loss and is only slightly above where it started. I would play for higher prices.